The show. Today is October 6, 2022. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Today we'll be talking about oil and MMTLP and NextBridge Hydrocarbons. There's been some movement with the stock, and so I thought it was a good idea to give my perspective. I probably will not be making a video every single day, but this I saw some movement and it was kind of interesting today. So anyway, this if you're not familiar or aware of what MMTLP is, here's a really super brief overview. MMTLP is basically some ways to get access to some oil and gas lands where 3.2 billion barrels of oil was discovered. It was, it's in the ground in Texas, and there's a 49% revenue interest in it. I won't go into the details of what it is, but basically that's what MMT is all about. It's about oil land in Texas, 3.2 billion barrels of oil. The reason I won't go into a lot of detail is that there are two videos which go into detail extraordinaire about exactly how MMTLP came to be, what NextBridge Hydrocarbons is, and they're called Thoughts on Oil Part 2 and 3. If you want full information on them, please check out those videos. They will tell you, anything that you really want to know about MMTLP and the history of MMTLP, how it came to be, and what's going on with MMTLP. If you care about the S1 filing and how MMTLP is going to spin out to NextBridge Hydrocarbons, there are 4 videos about that. The first one talks about the spin-out process, talks about NextBridge, what NextBridge is, etc. And the next one talks about how much it could be worth, etc. Again, it talks about the spin-out, etc. The third video is about an amendment to the S1, the First Amendment. So it's an S1A filing. And it talks about just the S1A. It assumes that you already know all the information. These videos are all cumulative, so I usually don't go back and forth on rehashing the same stuff. And the last video talks about the Amendment number 2, which has been recently filed just as of yesterday. And so I made a video about that, so check out that video. It's pretty cool. That goes into details about my first impressions on Amendment number 2. And finally, if you care to see what progress is being made on the site and whatnot, there's 2 last videos that talks about progress and the drilling that's taking place there. It talks about pipelines, etc. Right? We're about 10 miles away from the nearest oil pipeline or so it's not too bad. So I issued a tweet today. Tony's Twits is my Twitter handle. So if you want to follow me on Twitter, I usually talk on Twitter far more often than I will make a video. Anyway, I said it looks like somebody has a problem with $1.95 today at MMTLP, or at least going over $1.95. Got a nice response from Metasport Channel. Check him out. He gives you tons of valuable information on metamaterials. Awesome guy. Anyway, he says whoever it is, they'll run out of money soon. You know what? This is the price for the day, and it turns out he was right. Just by the end of the day, they ran out of money. We closed the day at $1.97, so we closed the day just a little bit higher. They ran out of money, it looks like. Maybe, who knows? It's hard to say. So this is the price of metamaterials for the history of its trading, the lifetime of its trading. It's only been trading since October of last year. And as we can see, it's rarely been above $1.97. So, this is interesting territory here. So I issued a tweet out that says, wow, it was a long day. We managed to close above the magic $1.95 level. And just be careful, though. Tomorrow could be very interesting. I'm expecting a lot of volatility because, MMTLP has rarely been above this level. It's going to be very exciting tomorrow. So we'll see what happens. But, just be prepared for anything, basically. Be prepared for anything. It could take off. They could slam it down. It's hard to say. Now, there's been a lot of talk about oil and what oil prices are, and we care about oil prices and what's been going on in the geopolitical world because, we're invested in MMTLP, right? So you may have heard about some discourse that's going along with Saudi Arabia in the mainstream media. It's very complicated and whatnot. I don't know what's going on. But anyway, I presented something that's what I believe is a much simpler idea of really what's going on between the U.S. and Saudi Arabia, right? We're basically telling Saudi Arabia, hey, pump some more oil, deplete your finite reserves. When you're done, we'll pump and sell our own oil at insanely high prices. So, naturally the Saudis are going to be like, I'm not sure that works for me. And so we reply, you're helping the Russians. So, Saudis are probably, I imagine Saudis would say something like, I think I'll just sell my oil to Europe, maybe Asia, that kind of thing. Don't worry about it. So, of course, we don't give up. We'll say, if you don't boost your oil production, we'll withhold spare parts from all that aircraft we sold you, all those F-15s. Yeah, how do you like them apples? And I imagine the Saudis would reply something like, yeah, about those fighter planes, including the ones you fly for yourself. What do you think fuels them? We'd probably say something like, don't get too cocky. If you don't boost oil production, we'll label you as a price manipulator. We'll invade you and take your oil. Okay? Everyone knows oil prices are set by commodity traders in the U.S., so why don't you just fix your prices there? Leave us alone. I imagine that's what the Saudis would say, right? And I imagine we might finally respond, but yeah, we did. But we're draining our SPR. It's not working. Prices keep rising. The pandemic is over. People are driving more. The economy is using more oil. And I imagine the Saudis would finally reply, draining your own SPR is your own problem. But what about elections? We got inflation. And the Saudis would be like, not my problem, really. Not really my problem. So what am I talking about the SPR about? What's going on there? Well, if you've seen any of my previous videos, you know that, we have a strategic petroleum reserve. And this is the weekly U.S. ending stocks of crude oil in the SPR, as told by the United States Energy Information Administration. Okay, EIA. They say that there's 422 million barrels of oil right now. Last time it was down around that level was, 1984, when there was 427 million barrels of oil. So that led Forbes magazine to say, strategic petroleum reserve is at its lowest level since 1984. And it could get lower. Who knows? Anyway, so the news yesterday was that Saudi and OPEC, Saudi Arabia is basically OPEC, but OPEC announces it will cut production by 2 million barrels a day, a move likely to send gas and oil prices back up. And this is what oil has been doing since the last year or so. Okay. The blue line is the average price of oil. As we can see at the time of this video, the price of oil was $88.29 almost. It's been going up. And the average price of oil, if you take the average over the last year, has been $92.13. Okay, $92.13. The price of oil, we're below the one-year average price of oil. The price of oil is undervalued right now, and it looks like it's headed upwards. We'll see what happens. We'll see. Anyway, I got sent a tweet or Meta Support Channel made this tweet, and I happened to subscribe to him, so I saw it. It says he retweeted John I Make Glasses, who has a tweet from Houston Wade's, who has a video clip from Houston Wade's last show. He has a video clip from Houston Wade's last night's show. So let's hear what Houston has to say.
My E-Trade stopped allowing buys. I thought I read some good news that it's getting closer to the S1 finally happening. Hope HW goes over that. Yeah, S1 got submitted, so now we're waiting for approval from the SEC on that sucker. Hopefully soon, right? And then the minute it gets approved, I think the announcement comes, and 15 days later the company turns private. So in 15 days, every single solitary naked share has to be purchased. And if it isn't purchased, then the broker for the hedge fund has to go out and basically liquidate them and force a buy on that stuff. So the price is going to go to whatever it is. So if we all sit here and go, no, I'm not selling until $100 a share, it's very likely it can go to $100 a share before privatization. And if it goes private and oil's at $110 a barrel, and there's 3 to 5 billion barrels in the Orogrande University lands, then we might be looking at $100 a share anyway. So and then like $1 billion of that sale would be windfall for metamaterial, and the metamaterial would go, hey, we just made $1 billion this quarter on like $6 million in expenses, and the internet goes, oh my god, and then their price shoots through the roof, and then they don't face that possible delisting anymore.
And so that's what Houston had to say. So I was basically summing this up. So he said the S1's been filed. MMTLP price could go insane. And then he follows it up with metamaterials price could go insane after that. Who knows? Let's see. If that makes sense. Well, we know the S1 has been filed. I made a video about it even. So the S1 has been filed. Actually, 3 S1s have been filed. The original S1 was filed. The S1A, the first amendment, has been filed. And the S1A2, the second amendment, has been filed yesterday. So we're just waiting for the approval. And so he's right about that. Next, he says MMTLP price could go insane. Well, that's interesting, because if you read the S1A amendment number 2 on page 23, they specifically talk about the stock symbol MMTLP. And they say, in particular, if any investors have sold shares of MMTLP short, then, in connection with the distribution, such investors may feel compelled to buy shares of MMTLP to cover such sales before the distribution, if this were to occur, given the potential high demand from buyers within a relatively low supply of MMTLP shares available for sale on the OTC market. The MMTLP price per share, as shown on the OTC market, may rise significantly. Basically, they're saying the price could go insane. They even talk about a short squeeze. Additionally, securities of certain companies have recently experienced significant and extreme volatility in stock price due to short sellers of shares of securities known as a short squeeze. Interestingly enough, this is the second amendment that they filed, and it could even be that the SEC required them to talk about a short squeeze possible in MMTLP. That's interesting. That is very interesting. They never mentioned MMTLP before, as I mentioned in my previous video. So, yeah, the price can go insane. I made a tweet about it as well a while back. I said, if any investors have sold shares of MMTLP short, they may feel compelled to buy to cover relatively low supply of MMTLP shares available. MMTLP price per share may rise significantly. That's the gist of it. Twitter only allows 140 characters or something like that. Managed to fit it all in there. Okay. Finally, the last claim that MMAT price could go insane. Okay. So, does Metamaterial have a bunch of MMTLP shares for themselves, right? Will Metamaterial benefit from these MMTLP prices? The answer to which is, I have no idea. I really don't. I know that MMAT did issue some loans to NextBridge, and those loans were used to drill, to do the continuous, to drill for, to drill more wells as part of the continuous drilling clause. Did they get some MMTLP shares as a result of that? I don't know. We'll see. What I do know is that a while back I made this chart of what an estimated value of the dividend would be on a per share basis for MMTLP. And if you're familiar with this channel, you know what this chart is all about, how it works and how it's been derived. If you're not familiar with this channel, there's a link provided that will show you exactly how this chart works. And you can click the link and see exactly how it works. How it's calculated. There's even a GitHub repository for that, so you can download it on your own if you want. Anyway, back to the charts. And if we look at it, all we do is we look at the price of oil in terms of dollars per barrel, and you go up to the appropriate area, and then you get, what the actual value of the dividend would be. So the price of oil, as we saw, was around $80.29 or so. And the 1 year average price of oil was $92.13. So if we plug that into the area of the chart, we see that we get an estimated dividend value between $54 to $58, and that's a fair value, right? That's a value based upon what the amount of oil in the ground is and what the price of oil is, right? That's based upon that. That's a reasonable, fair value. But in a squeeze situation, it can go a hell of a lot higher than that. Squeezes don't have nothing to do with finding fair value. Squeezes have to do with the fact that, people are forced to buy. So if a squeeze happened, the price could go significantly higher than that, right? And suppose these MMTLP shareholders just decide to reinvest just a portion of their profits back into MMAT. I talked about this in some previous videos a long time ago, and I haven't really spent much time talking about it, but that's, it's a what if scenario, right? What if just, a small portion of these of the profits went back into MMAT? What would happen? Let's see. Let's say that it doesn't squeeze, right? This is, suppose you only get the fair value, right? $55 a share. We know there's 165 million shares outstanding. That's about $9.1 billion that's being paid out in value, right? $9.1 billion of value that's being paid out to MMTLP shareholders. That's a lot of money. If 10% reinvested, that's $910 million that gets reinvested back into MMAT. $910 million, okay? Let's look at the price of MMAT today. It's $66. It's 66 cents, 0.6659 cents. And we know that there's 360.84 million shares outstanding, okay? They also say that there's about 24.97% of shares outstanding are held by insiders. And I'm going to disregard all the rest of the numbers here now. Right, I'm just going to look at insiders, because insiders tend to hold their shares, and they tend not to sell their shares, right? And they can't because of various, they have windows to sell, right? They have blackout periods, all that. So insiders can't really sell their shares very easily. Let's say everyone else can. That leaves 270.74 million shares not held by insiders, right? 75% is not held by insiders. And, that's 270.74 million shares, right? 75% times 360 million is 270.74 million, right? Dollars per share, we have 66 cents right now per share. That means that if you take the dollars per share, you multiply it by 360 million shares, you get $240 million of market cap. That's what all of MMAT is worth today, this second, okay? Let me state that again. All of MMAT is worth about $240 million. But we're talking about reinvesting something like $910 million into it. What does that mean? So if we took $910 million and we bought, and we were able to buy all of the shares that were available to buy, let's say every single person who had a share and who could sell it sold the share. It's $270 million. 270 million shares were sold for $910. That would be an average price of about $3.36. That's if all the current shareholders sold all of their shares. Okay, everyone. Is that likely to happen? Probably not. Okay, I doubt that you could get everyone to sell. Okay, I don't care what's going on. You're not going to get everyone to sell. What's reasonable, right? Maybe you can get 20% of the people to sell. 20% of the people might be in desperate need. They might need to sell, and given some money, they might sell. So, if 20% of the shares are actually sold, that's only 54.15 million shares, right? 270 million times 20% is 54 million shares. That's if only 20% of the shares wind up getting sold. If that happens, and $910 million buys all of that 54 million shares, that's the average price of about $16.81. $16.81. That's where it could be. That's if 20% of all the shares were wound up getting sold. But suppose that $910 million is used to buy all the shares and the price doesn't move. How could that happen? $910 million. You spent all that money and you didn't move the share price? Well, it's quite possible that, a market maker might get involved and they might decide to supply liquidity to the market, right? Supply liquidity. That means that they're basically going to give you some fake shares that you can, that your broker and everyone pretends are real shares. So you have some, synthetic shares that are out there now. Naked shorting. Market makers are allowed to naked short. What would happen if that were the case, if the price didn't move? Well, if the price didn't move, that means that your $910 million bought shares at 66 cents a share. That means that 1.367 billion shares would have been purchased. Let me say that again. 1.36 billion shares would have been purchased. The price didn't move, though, right? I mean, so what do you care? Nothing happened, right? You just got fake shares out the wazoo. Corruption, you'll say. What? But that also means that, there were only 270 million shares that were actually available to be sold, right? Possibly. But 1.367 billion shares were sold. That's a multiple of about 5 times the number of shares that could actually have been sold that were actually sold, right? 5 times. When all those shares are in all these brokerage accounts, suppose that just 20% of those shares wind up getting directly registered. Huh? What are you talking about? Suppose people decided to directly register those shares with the issuer. Well, that means that all the shares, all of those 270 million shares that were available before, they have to wind up going to be directly registered, and there's no more shares left to be lent out. I'm not looking at institutions or anything like that. They've already lent out their shares, whatever. But at this point, if all the shares are directly registered and all the insiders hold all the shares, it's all counted at that point. And only 20% of the shares have been lent, right? So what happens if 100% of the shares are directly registered? There are hundreds of millions of shares in people's brokerages that are synthetic and phantom. Everyone knows it. Chances are, when it's all directly registered, some people will want to directly register whatever shares they have, a little bit more. Maybe 1% might attempt to register some more, let's just say. But already 100% of the shares have been directly registered. So what happens? Well, the broker has to go out and get those shares. But where can he get the shares from? He can't get them from anywhere, because anywhere he goes to get them from, he gets a synthetic. He doesn't get the actual shares. So what happens? Let's hear what Thomas Peterfy had to say about a similar situation. Not quite this situation, but something very similar. The GameStop event, which happened in January 28th of 2021.
How close we were to this system breaking, something failing. How close were we, Thomas?
We were frighteningly close on January 28th when we had 50 million registered shares. At the same time, we had 70 million shares short and 150 million shares short via short call options. So if the call options had been exercised, the shorts would have had to deliver 270 million shares, while only 50 million shares existed. So as the rules are today, the long broker has to, if he can't get the shares, he has to go into the market and buy the shares at whatever the price is. So that could have pushed the price further up into the thousands. When that happens, obviously the shorts cannot pay up. So the brokers, they default on the brokers default on the clearinghouse, and the whole thing is a huge mess that's impossible to untangle. So there is a simple solution for this, the way I see it. Number one, we would have to get the short positions published once a day, because we currently have it only twice a month. And second, we would the SEC would have to require brokers to charge an additional 1% of margin for every 1% of short interest. And that would then raise the margins progressively so high that people would stop shorting stocks.
Well, we know that didn't happen. So, but it's a nice idea that he had. His solution, I believe, would have worked if people chose to implement it, but naturally they didn't. But the question is, could something very similar happen with metamaterials when 100% of the shares have been directly registered, and then you attempt to register a little bit more? Right? The brokers have to go out and get the shares. They have to get them at any price, and they're just not available. So, I think this is what could possibly drive the price of MMAT to insane levels. So, could the price go insane? Yes. I think it could if something like that happened. And I think there is some strong probability that something like that would happen because, it's only 10% that have to buy back. It's only 10% of the value of MMTLP that if it gets reinvested back into MMAT and people directly register, and if that price doesn't move, people will directly register. And when 100% is directly registered, then something interesting could happen to MMAT. Okay? Anyway, so that's my video. Let me end by saying I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. And I'll see you on the moon. And this is Market Moves. So with that, I'll say goodbye.